Hello champions, good evening. I hope everybody is doing well. Welcome to Officers Adda 247 official YouTube channel dedicated for English medium audience. So today we will be starting with the unit number 19. As you know that this series is for IE and IFS, one of the most toughest component of your JAIIB exam, and I hope that using our guidance, using the lectures, using the learning curve which we are providing you here on our channel, you will easily crack this particular component as well and clear the JAIIB exam as whole. Fine. So today, as I told you, I will be taking up unit number 19th, the last unit of module B. After that, we will be taking up module C. So what is the importance of this particular unit? It is highly important. Why? Because today we will be talking about the union budget. Okay. I hope that everybody knows what a union budget is, presented on every you can say every year. It's an annual process by Government of India, and the presentation of budget occurs in the parliament of our country in the parliament on 1st of February. Earlier it used to be there in the end of Feb, but now since 2016 things have changed, and we have the official date as 1st of Feb. So just few days are left for the union budget of the preceding year, and we will see that what all initiatives government has taken and what all new schemes are there in line for various infrastructural activities as well. Plus what all we can see or expect is the revenue and expenditure. What all revenue has been earned using the tax and non-tax things, by non-tax components, tax components, whatever revenue the government has earned. Plus we will also see that what are the expenditures, where the government of India has done those expenditure, and what is the plan of the government for the upcoming years where it will invest. Fine. So all these things will be there in the upcoming union budget. Today's topic, that is union budget, will cover basically the components. Components, what do we mean by components? That when we talk about union budget per se, then what do we mean by union budget? Fine. And union budget has two important components, that is the account from which the budget is being occupied, like your capital account is there and your revenue account is also there. So these two types of accounts will hold a major chunk of our discussion, because ultimately there will be sub components related to these two accounts only. And as I was telling you, that revenue and expenditure are two important components. They will fit in these two accounts as well. So let's start our discussion on this particular note and see what all important topics are there in this particular topic or unit. So we will be starting with the basic definition of union budget. What do we mean by union budget? And in the last session I have discussed one important difference between the monetary policy and the fiscal policy. What do we mean by monetary policy? A particular policy provided by the central bank of the country, and whose special emphasis is on to curb the inflation. If the Central Bank of India, or you can say RBI to be very specific, if RBI wants to curb inflation, it must have a robust monetary policy. On the other hand, if Government of India wants good economic growth for the country, then they must have a robust fiscal policy, and union budget is a part of the fiscal policy only. Fine. So we will also be seeing that what is the fiscal policy. Okay. Then we'll move on to the categorization or the components of budget, like revenue receipts, tax, non-tax. Fine. Two types of revenue receipts are there. We'll look into that. Plus what do we mean by revenue expenditure? Along with that, capital receipts, debt or non-debt, that we will also look into. Fine. So revenue expenditure is what? It is the expenditure done using the account which has created certain revenue. We will see that also. But first of all, let's just revisit this particular slide where we discuss the difference between monetary and fiscal policy. Monetary policy, Central Bank of India, or you can say RBI to be very specific. RBI wants to curb inflation, it will have a robust monetary policy. Government of India and specifically Finance Ministry of India, if they want to have a robust economic growth, they will target on the government's revenue and expenditure part, and this particular part forms the essence of union budget. Okay, so the union budget falls under fiscal policy, fine, and the finance ministry is directly involved in framing this particular policy document as well, and taking out various components, that where we must invest, what is the infrastructural activity we must have, what all borrowings we have taken, everything will be discussed in union budget. So union budget is what? The annual budget of a country is known as union budget, fine. Financial year, assessment year, various you can say timestamps are there, but overall the time is for 1 year only. It is presented by the Union Finance Minister Nirmala Sitharaman in the parliament. It has been undergoing certain modifications since 2016, as I was telling you. Earlier, the budget used to be presented on the last working day of February, but now things have changed, and now we have what? 1st Feb as the date. Okay, on 1st of February, we have this date for your union budget. So let's see what all revenue or expenditure unfolds in 1st of Feb 2025 also. The rationale, why this change, understanding this thing is also important, that why is there need to change this particular date. Earlier what used to happen, the government of India used to have only 1 month to implement the all you can say all those components, all those discussions which are being made in the union budget within 1 month, fine. Implementation was done on April, the budget was presented on the last working day of February. So effectively it has only 1 month for the implementation part. Now in order to increase that time period, they have now 2 months, and it will ultimately impact the efficiency in a positive way of the implementation. Another change is what? Another change is that earlier we used to have 2 separate budget, fine. The budgetary document known as AFS, annual fiscal or financial statement, there used to be 2 statements, one pertaining to the union budget and second specifically the rail budget. Now since 2017, both of them have been merged and clubbed into one, and now we have only one statement or one document, that is union budget. Okay. Now let's come on to the most important part, this particular classification or the sub classification, how we should understand this and what is the use of understanding this particular table or chart. See, if you want to understand budget, just visualize one thing in your head, that you have budget for everything, fine. Only one thing you need to understand is that there is revenue and there is expenditure, fine. When we talk about budget of, let's suppose, monthly expenses, fine, monthly expenses, or bank's budget, a particular branch also has a particular budget. In banks also we have a particular budget assigned to us by our regional offices. So let's start with the monthly expenses. How these expenses are monitored, how the monthly budget is decided. Primarily, if we talk about monthly budget, we have what? We have a salary component, which are what? It is the earning, fine. Your earning is equal to the salary, whatever salary is credited to your account. Now monthly expense will be what? The spendings, whatever you have spent. And once you subtract your earnings and spending, you will get what? The budget. Okay, that is the maximum limit till where you can invest or where you can spend. If you exceed the expenses and your salary is not that much, then definitely you will be doing what? You will be taking a loan or debt. So more or less, budget means what? It is just a particular number, a numeric value which you can calculate using your monthly expenses and monthly you can say monthly salary, fine. Both these things are very important. So revenue refers to your earning or your salary, and expenditure refers to what? expenditure refers to your spending. Fine, whatever you are spending on a monthly basis. Okay, so this was an overview with an example of your salary. Fine, if we talk about salaried employees, then what is the budget? On the similar basis, we have budget for Government of India as well. Now, one important thing, your salary will be credited in one particular account, only one account. Fine, because we are salaried employees, we have one account only, that is savings account. If we talk about businessmen, a particular businessman, they can have multiple accounts, multiple CCODs, revolving credits also. So, multiple accounts can be there. Okay, so basic components, whenever we talk about budget, there are two components, revenue expenditure and one account, one or multiple accounts, whatever we have as a particular entity, varies between various entities. Let's come on to the part where Government of India is that entity. Fine. Now, for Government of India, budget will be what? It will be based on again revenue and expenditure. Fine. Whatever earnings Government of India is doing, it will come under what? Revenue. And whatever spending Government of India is doing, it will come under the part of expenditure. Now, which account does Government of India uses for their revenue and expenditure? It has two accounts, one revenue account, another one is capital account. What is revenue account? Revenue account basically pertains, or you can say revenue account is defined by all those revenue or the earnings and expenditures of Government of India which are done within a time period of 1 year. So, revenue or expenditure of Government of India will be done from this particular account, revenue account, if the revenue and expenditure is for less than 1 year. Fine. Earnings will be credited to this account and Government of India will use this particular account to spend some money. But this time period should be within the time frame of 1 year. Whereas capital account, if we talk about the earnings or the expenditure, these earnings and expenditures can take more than 1 year, and normally long term means more than 1 year, in fact more than 5 years also, they are covered under the capital account. All those transactions basically they will cover under the capital account. Fine. Transactions happening on daily basis, transactions happening on monthly basis, transactions happening bi-monthly, quarterly, semi-annually or annually, they will fall under revenue account. Otherwise, they will fall under the capital account. Okay. So, I hope this particular differentiation is now clear. Okay. Any doubt? If you have, for all of you who are watching this session, if you have any doubt, you can just ask me. Fine. And if you are watching the recorded video also, then again I will highly recommend to comment below and tell me what all doubts you have. Okay. So, now revenue account will have what? Some receipts and some expenditure. So, revenue receipts and revenue expenditure. Fine. Expenditure will be what? The spending. Receipts will be what? Earnings. Now, as you know that Government of India earns the maximum revenue through the taxes. Fine. Taxpayers' money. That is the phrase where which we use on you can say daily basis also, that taxpayers' money is running the country. Fine. So, what we have done, or the Government of India itself has classified its receipts under the revenue account as tax receipts, all those receipts, all those earnings due to the tax, and non-tax receipts, that is all those earnings apart from the tax which it has collected. Fine. So, this is about the revenue account. Now, let us move on to the capital account. more than 1 year. Transactions happening for more than 1 year. Time period is more than 1 year. It will also have what? Revenue as well as expenditure. Fine. And the revenue under the capital account, it can further be classified as debt and non-debt. Okay. Now, why do we have this debt and non-debt under your capital revenue only, and why not for the revenue receipts? That is a pertinent question. Answer to that is, since the revenue receipts, when we talk about revenue account, they are for what? Short duration, shorter duration, and Government of India, or for that matter any country, will take loan or borrowings from external sources for more than 1 year only. Long term borrowings, whenever we talk about borrowings, they will be what? More than 1 year, definitely more than 1 year. That is why for more than 1 year, what we have? Capital account, and that is the only reason why we have debt creating and non-debt creating capital revenue. We do not have debt creating, non-debt creating revenue receipts. No, we do not have that, because the investments, the borrowings will be done for more than 1 year. So this account specifically capital account, will take care of all these you can say investments or borrowings. Fine. Okay. So basic overview is clear, I hope. Now we'll move on to the receipts part. In this session, we will be covering only the receipts part, whether it is the revenue, your real account, or for that matter your capital account. So in receipts, we have what? Revenue receipts, and under the revenue receipts, we have what? Tax and non-tax. So as I was telling you, all those receipts under the revenue receipts which are collected based on the taxes. What tax? Corporation, income tax, wealth tax, GST, CGST, IGST, GST, compensation cess, other taxes, your customs, then we have excise duties, service tax, and taxes on the UTs. All the taxes which are levied on the UTs, they will form a part of tax receipts. Fine. Tax receipts or tax revenue. And all those funds generated under the real account, which are not the part of taxation system, they will form under non-tax revenue. Okay. So when we talk about net tax revenue, it has 2-3 components. One component will be the addition of all these taxes. Fine. Second component is important. Why? Because it has certain contingency funds. Contingency funds. The revenue earned by Government of India will not be fully utilized. They will keep aside certain funds for any contingency, any natural disaster, any war, or for that matter any other emergency. Third part of the revenue is the fund allocation for the states. So states fund allocation, because ultimately if government is earning something, states must also have certain part of that. Okay. So states, the allocation to the states will be the third part. Now when I talk about net revenue, the net tax revenue, what will be the final value? Adding all these taxes and subtracting contingency funds and your state's share of funds. State share of fund primarily started after the implementation of Niti Aayog only, but earlier also it was there. Primarily I am saying why? Because specifically now states fall under this particular domain. Okay. So net tax revenue will be gross tax revenue, addition of all these taxes, minus the funds transferred to the National Calamity Contingency Fund, and minus the state's share. Fine. Fiscal federalism, and Niti Aayog, Planning Commission. I hope you guys remember, because we have dealt with this particular unit also of Planning Commission, planning in India. Fiscal federalism, states share. That is why we were saying that it is an important part. The state allocation fund is very, very important. Okay. Next, let's move on to receipts under the non-tax revenue. Under non-tax, what will fall? All those receipts, all those sources of money which the government of India is earning within 1 year, but they are not part of the taxation system. So the interest receipts, all those interests which government of India has credited in the account, the budget, dividend and profit, external grants, some countries, some developed countries providing grants in SDGs also, Sustainable Development Goals achievement also, we get certain grants from UN. Other non-tax revenue, all other means everything else apart from these, and receipts of the union territories. Fine, the funds received from union territories, because which government is involved in functioning or administering these union territories? It is the government of India. Fine. So total revenue receipts will be what? Net tax receipts, the previous slide, plus the total non-tax receipts, these one. Fine. If we add both of them, we will get what? Total revenue receipts, not the capital one, total revenue receipts. Now let's see the capital receipts. Fine. Revenue account we have seen, revenue or real account, whatever you want to call it. Capital receipts, now we will see. And the definition of capital receipts is all those earnings of government of India which are done for a time period of more than 1 year, more than 1 year. So non-debt and debt receipts. Now what about non-debt and debt receipt? Let's just understand this thing. Let's have one example, that World Bank, okay, government of India requires certain funds from World Bank, okay. Now it approaches World Bank, let's say on 1st of January 2025, okay. And the demand of government of India is that we want 500 crore, okay. Just for assumption, that is a very huge amount, but for your assumption only. Fine. So World Bank says, after considering for 2-3 days, on 4th January, that is today, World Bank says that okay, we will pay 500 crore to government of India for whatever purpose they want, and we want the repayment of these funds. We want repayment of these funds by 1st January 2030. Okay. Now, as soon as government of India will receive these funds, 500 crores are credited to the account of government of India, and these funds will be utilized for a time period of what? 5 years, 2025 till 2030. So 5 years, and 5 years is more than what? More than 1 year. Okay. If the spendings, if the expenditures are for less than 1 year, then which account will be used? Real account, or you can say the revenue account. If the spending, expenditure, revenue is for more than 1 year, here it is 5 year, more than 1 year only. So it will go into which account? It will go on into the capital account. Fine. And the plus sign, this 500 crore will be credited. So current account will be credited, that is plus sign will be there. And we will say that today, when the World Bank has credited the account of government of India, on today, that is 4th of January, this money has been credited. So when this money has been credited, that is on 4th Jan 2025, this will be what? It will be the revenue generation for the government of India. Fine. So it will fall under what? Under the component of capital receipts. So we have 500 crore now. Okay. Till now it is clear. I hope it is clear. It is not in the revenue account, it is in the capital account. That is why 500 crore is now in the capital account, capital receipts. Now let's see whether it will fall under non-debt or debt receipt. When we talk about non-debt receipts, these are the receipts wherein government do not need to pay any kind of interest or fees or charges, or in fact repay that whole amount. Fine. But this particular amount 500 crore is to be paid back to World Bank on 1st January 2030 along with certain interest as well. World Bank will charge certain interest also, na? It is not doing social work that okay, you can take 500 crore, I don't want it back, neither I want the interest. No, it will take. So interest will be paid by the government of India on this date 1st January 2030, and this particular 500 crore will be subtracted from the purse, from the wallet of government of India, and this 500 crore is where? It is in the capital account. Fine. This capital account will get debited by 500 crore and along with what? Along with the interest amount. Okay. So on 1st January 2025 or specifically 4th January 2025, this particular amount is what? It is the receipt for government of India. But since it is under the form of loan which you need to repay, which the government of India will repay to the World Bank along with interest, so it will fall under the debt receipts, because government of India not only needs to pay back 500 crore, but it must pay the interest amount as well. Okay. Today on 4th January, it will be coming under the debt receipts. But if we talk about the actual date of repayment, that is 1st January 2030, then it will come under what? Under the capital expenditure. Fine. Government of India has certain money of 500 crore plus interest, whatever the amount is, the total amount, and its capital account is being debited. So on 1st January 2030, this particular loan amount, this particular debt will become what? Expenditure for government of India. Okay. So I hope this whole process is clear now. Fine. If you have any doubt, you can ask me. But again, I want you to understand each and everything, whatever is written here, all these things are relevant for your understanding. So do write your doubts in the comment section. So let's talk about non-debt receipts. All those receipts which do not pertain to any loan, any debt, any interest payment or any repayment altogether. So recoveries of loans and advances, if government of India has given Sri Lanka some loan and they have repaid the loan, then definitely it is under what? Non-debt receipt, because loan is being given way back in 2021 or 22, whenever the Sri Lanka turmoil happened, Sri Lanka's economic turmoil happened. Now after more than 1 year, Sri Lankan government is repaying the loan, then it will come under what? Capital receipts, and specifically under the non-debt receipts. Fine. Then investments, the disinvestments, or you can say privatization, the FDIs which are there, and money is being received by the government of India from the investors, it will come under what? Non-debt receipts. Here you will see all these components which are written here, they will form what? They will form one or the other form of the debt. That is why they are under the debt receipt. Like market borrowings, if government is borrowing from the market, fine, ultimately it has to repay it today. If it has bought certain you can say use one's bill or any kind of bills of exchange, so its account will be credited today. But on the date of maturity, when it has to repay, fine, somebody has bought the GSEC, let's just start with government securities only, simple, let's keep it very, very simple. So somebody has bought GSEC via RBI, and the account of government of India, that is capital account, will be credited today. but on the date of maturity, when the particular GSEC instrument will mature, the account will be debited and interest payment will be there provided by the Government of India to the consumer via RBI. So, market borrowings, securities against the small savings, state provident fund, PF funds in case of state only, other receipts, internal debts and public accounts, all those internal debts, they also form a part of debt receipts, and external debts as well. So, Government of India, its account, its receipts, debt, non-debt, tax, non-tax, these are the terms which you must understand for having a good understanding of the budget. Now, what will be the ultimate capital receipt? The total capital receipt, it will be the summation of non-debt receipts plus the debt receipts. Fine, non-debt plus debt receipts, that will be the total capital receipts. On the other hand, if we talk about the total receipts, that is your revenue receipts or real receipts, whatever you want to call that account, and your capital receipts. Total revenue receipts plus capital receipts plus your cash balance, if any. Okay, so cash balance will also be adjusted because you are receiving money, na? So your wallet will be ultimately credited. Okay, so major differentiation you must make between the non-debt and debt receipts, how they are different from each other. Fine. Now let's solve one question. All of you who are watching live, I want everybody to answer, and for those of you who are watching it in the recorded format, do leave your comments in the comment section that whether you have the correct answer, you have marked the correct answer or not, or if you have some different answer, then why. Fine. If you feel that the answer which I am providing in this session, they are not correct, then why they are not correct and what will be the correct answer. Trust me, we will have good discussion and we will try to learn as a group. Okay, so the question says, which of the following form a part of capital expenditure in the Union Budget of India? Capital expenditure. In this particular session, we have learnt about the receipts part only. We have not talked about the specific components of capital expenditure. Still, if you have understood that particular chart which was there in the beginning, then definitely you can answer this particular question, because revenue and expenditure, these are polar opposites if you have understood the concepts. Fine. So, securities against small savings, they are what? They are under the non-debt or debt revenue. Non-debt or debt revenue. Securities against small savings, state provident funds, internal debts and public account. They will be under what? Debt. All the three are under the debt section of your capital account. Fine. Along with what? External debt and n number of examples. So, none of the above will be the right answer, because all of them are what? Capital receipts, not the expenditure. Okay, option D is the right answer. Now let's see this question. Very simple question, because questions will be asked in this particular form only in the exam also, that what is the total receipt, which of the following falls under the capital account or capital you can say non-debt or debt receipts. All these questions will be framed like this only. Which of the following form part of total receipts in a union budget process? So, we have total revenue receipt, capital receipt and cash balance drawdown as well. So, just now we have seen that total receipts is the summation of all these three. So, all of the above will be the right answer. Fine. Option D is the right answer. Yes. Fine. Next is dividends and profits form a part of what when we talk about union budget process? Definitely receipts, fine, receipts. And in receipts what? Whether they are short term or long term, dividends and profits, because dividends and profits are paid sometimes on monthly basis also, bi-monthly basis also, and annual basis also. It depends, but mostly dividends and profits form what? They form revenue. Definitely they are a part of revenue when we talk about the union budget. But whether tax or non-tax. So correct answer will be non-tax. Option C is the right answer. Fine. Here some you can say mistake is there. Option C is the right answer. Fine. You can cross check also here. These dividends and profits. These are what? These are nothing but the non-tax revenue. Okay. Fine. So this was it for this particular session. If you like the content, then do subscribe our YouTube channel. This is dedicatedly made for the English medium audience only, all of you who want to learn in English medium only. So I will highly recommend you to subscribe the channel and like the session if you think that you have understood something new or new concept has been introduced towards you and you have grasped it. Along with that, one very interesting news for everybody. Tomorrow at 1 p.m. we will be having our batch launch. So that particular session you must attend and do give your views there, that what all you want to include in the batch, and we will also be providing you with n number of informations. We'll be happy to interact with all of you. So do join the session. Don't forget, do not miss that particular session at 1 p.m. sharp on this particular channel only. Okay. You can also download our app and just enjoy the seamless experience which we are providing on our applications. Fine. Okay. So hit the bell icon so that whenever you open up the YouTube, you have a pop-up that one new video has been posted on our channel. And what this particular thing will do, it will imbibe that thing that now you need to study. Fine. Every time your brain visualizes that yes, a new video is there, you will feel that urge to open that particular video. And if a very short video is there, or for that matter you are sitting having your lunch in the office and a short video is there in our on our channel, then you can just watch it and learn new things, fine, related to the exam, and ultimately crack your JAIIB in this attempt only, that is May 2025. Okay. So let me just quickly navigate you through the course which we are launching tomorrow. This is the course which you can see on the website, that is adda247.com. Here under JAIIB CAB you will find JAIIB May 2025, view all, and you will get the course here. The winners batch which will be launching tomorrow, just click on buy now and use the coupon code which is Y1003. Okay, and you will get instant discount if you use this particular coupon reflected in your cart also. This is the code which you can note down. Now, what are the features of this course? Although we will be telling you in greater detail tomorrow also, but the main feature here is interactive classes. We try to come up with interactive ideas so that cross questioning will be there in the class, and the major aim of our class is that the 1 hour which you are spending with us, after that 1 hour you should not have any doubt left for that particular concept or that particular unit. That is the USP of our classes. Secondly, the quality content which we provide to our enrolled students, plus on YouTube also we are providing good content. Along with that, you will have n number of quizzes which you can attempt and be the part of that league where you have cracked the exam. So various things are there. If you become a part of our course, you will realize it more. So I would highly recommend that to join the course, because time is also less. Now we have entered in 2025 and I feel that time is now running out, and if we do not grab the opportunity or we do not go full throttle in our preparation, then definitely we will lag behind. And the time which is left plus the time in hand, fine, there are two things na. Time in hand means what? The actual time. See, January is there, we are sitting in January, February, March, so it will be consumed by the official tasks only, fine. You will be having closing, some branches will have audits and so on and so forth. After that only April is left. May, we are expecting that exam will be held in May only. So effectively we have only 3 months, and in 3 months you have to complete 4 components. So that is why I am telling you, if you feel that you want a professional advice which will multifold your chances of cracking this exam, that is JAIIB exam in May 2025 only, then do consider the course, and the procedure I have already told you along with the coupon code. So any doubt for those who are watching live, you can ask me. Any doubt? Okay. So for all of you who are watching this in the recordings, in the recorded format, do comment in the comment section all those 3 questions, their answer, along with any doubt which you have, and I'll happily reply to all of your doubts. Okay. So we'll meet in the next session. Till then, take care and do not forget to revise whatever we have studied today.